Hi everyone, welcome to WIC channel. My name is Rifad. So as you guys may know, it's been like a earning frenzy with like Netflix reporting and a bunch of other companies coming into it. And also come to it is Chewy that reported their earnings also. So I was like, why don't I do kind of do a brief video about their earnings to kind of because we did a video about the IPO and is there a good time to buy kind of stuff. I would say it'd be a good time to kind of recap the video and like give kind of my 2 cents on their first release of the quarterly earnings as a public company. So let's get started. So here we go. So their sales came pretty much like 1.1 billion, which was expected also 1.1. Their loss per share came 8 cents, which was they were expecting 7, so it kind of they missed that. And their adjusted EBITDA loss came better than expected, which is 18.5, 18, sorry, loss came 18 point, no, 15, sorry, 15.8 million compared to 15.9 million overall. So as you guys can see, the CEO mentioned like their sales have grown over 45% year over year. As you guys can see, if you go just kind of into financials, so if you go quarterly, I don't know, I have it previously, but you can see the year over quarterly has grown. So it's kind of interesting that they're still growing year over year quarters because they don't have the annual, unfortunately. But this because this is like their first release, right? So year over year they're growing. So it's kind of the things they have, but the stock kind of didn't react properly, right? You guys can see since the earning came out, the stocks have just kind of pretty much dropped. We could say let's just put it here 5 days. So you can see here it just pretty much plummeted from like $33 its high to now $30. So main reason they reacted is because the evaluation started becoming the question, because already at 33, even $30, the valuation of the company was pretty high just to begin with. So now, yes, they were in line with what was analysts expecting, but when you're a growth company, your target should not be the analysts or your forecast. You should technically beat those expectations and beat them by a certain number of percentage so people could be like, wow, it's good. If you hit the expectations, yeah, okay, that's good. That means you don't justify the valuation, so we're gonna drop the shares are gonna drop by default. That kind of caught them, so people started questioning their growth possibility and stuff like that. But with that said, I don't think the growth of Chewy is finished. I think they can still grow. The pullback can be an interesting opportunity for people to kind of jump in if they're interested to buy in. Now it's becoming interesting territory for me. I will just see how low you can kind of get into to maybe open a position for them. But overall, which I think is that I think this sell-off is kind of what was kind of like an opportunity, I would say, for you guys, maybe if you guys are interested to buy into it. But yeah, if you didn't come back when I said the growth companies, usually you should not be targeting as expectations. You should always beat them and everything. So, but overly kind of saying with the CEO, kind of he spoke in a conference call and stuff. They're overly optimistic, and with optimistic come with the Prime Day sales and stuff like that. They know online is taking more and more importance, and they continue on their focus, which is to be customer centric for pet owners. So yeah, I would just say kind of that about Chewy to kind of give you guys a kind of short overview and say what I thought about them and where could they end up. But and like yeah, before I let you guys go, I just want to kind of give you guys the next analysis. I would say for next quarter coming, they're expecting a loss of more like still loss, but their sales are expecting to be around uh 412 well 1.12 billion, so it's kind of gonna go up again, so they're kind of expecting a higher sales than what, so they're kind of expecting that, so if they can beat that, and also still that Chewy kind of gets still the next quarter they are planning to beat that also, so they kind of expected between initially between 1.12 billion, now they're going to expect between 1.12 to 1.4 billion or 1.14 billion, sorry. And they're overly for the year. They before anticipated 4.65 billion. Now they're going to expect between that to maybe 4.67 to 4.775 billion. They're expecting that also to grow, but but yeah, this is good that they're reevaluating this, they're reassessing their forecast, and expecting it to grow. But still, I would say, it's not high enough, like, it's okay, yeah, you're expecting 4.6, like give a 5, like, I'm going to hit 5, I'm going to hit 6. That's kind of a way people expect for a growth company. So kind of the shares will go in consequence, because already those kind of valuations are already taken into account in the stock price has taken those and stuff into account. So if you don't beat those prices, or you hit them, people are going to be like, okay, it's just, they're going to plateau, so the sell-off begins. But yeah, I would say I'm monitoring it, so we'll see where they kind of land this downfall. Maybe it could be an opportunity. So yeah, let me know in the description down below what you guys think about the stock. What do you guys think about the earnings they released? Do you think I see any future growth for them or stuff like that? Or also let me know any other stocks you guys are reviewing, or the quarterly reports that you guys want maybe to kind of go in depth of companies that released. I would certainly review them and release a video. So yeah, if you like the video, hit the thumbs up, subscribe if you don't subscribe, and thank you very much for watching, and have a wonderful day. Whoosh!